A company once valued at $5.7 billion might be headed for bankruptcy. That's according to various reports. Vice Media reportedly approaching that cliff edge while the change of finding a buyer remains on the table. Now, its potential downfall underscores the tough environment facing digital media companies as they struggle to cut spending during economic uncertainty. Here with more on the changing media landscape, we have the Washington Post media reporter, Elahe Izadi. Thank you so much for joining me this morning. So, I first want to start with Vice, obviously a spectacular fall from grace. How did it get to this point?
Yeah, so as was mentioned, Vice Media raised billions of dollars. At one point in 2017, it was valued at $5.7 billion. It came out in an era, it started out as a magazine based in Montreal with a sort of punk sensibility. It grew into this multimedia company that attracted billions in investment. At one point, Disney and Fox reportedly both explored buying the company. They invested hundreds of millions of dollars in there, and it grew into not just having its own TV network, it's having its own film studio, but also producing Emmy award-winning documentaries and series. It really ballooned into much more than just this magazine. And, it came out in this era in the 2010s. We could look at this time in digital media, one in which there were a lot of hot media companies that did raise lots of money. There was lots of interest, and they promised essentially that, look, we are the future. We are the future of media. We can attract millennials, younger audiences. Newspapers are dying, print is dying, and this is really the future. And they sold this promise. And as we can see, they couldn't grow fast enough to make up for those promises, especially when we're now in an economic environment where the advertising industry and the advertising revenue has dropped off. And also, these companies sort of banking on these other companies like Google and Facebook, and, an algorithm can change and that can totally disrupt your business model.
I mean, when you think of just how much media has changed, even over the COVID years, the things that we didn't think were possible. I mean, you also have changing viewer behaviors with more streaming. You mentioned reduced ad spend here, higher costs with inflation. Do you think, was there a particular inflection point when it comes to digital media, or was this sort of the bearish signals were already flashing?
I think they were already flashing, but the pandemic certainly accelerated a lot of trends in media that were already there. I mean, the same thing happened with print and newspapers. But when we're talking digital media, it was very fascinating to me because actually during the pandemic, and especially at the start, we actually saw audience spike. There was a lot of online interest, reader interest. We saw a lot of that happening, but that didn't necessarily mean an increase in revenues. And then over time, audience dropped off. And so that was a dynamic that played out. And in addition to the bigger economic issues at play, we saw rounds and rounds of buyouts and layoffs. Vice Media has gone through many layoffs in addition to just recently closing and shuttering its news program, Viceland. And so, even though Vice and other media organizations may have been producing award-winning journalism, hard-hitting journalism, Vice was known for sort of going into conflict zones, covering human rights abuses, also kind of taking on a gonzo approach, journalism approach. Even if your product is really good, that doesn't necessarily mean that the business model is there. And just stepping back, since 2005, that's the peak of print revenue, of ad revenue. And ever since then, media across the board, journalism industry has been struggling to figure out a viable business model. Is it dependent on ad revenue? Is it dependent on subscribers? Is it a mix? Do you have sponsorships? And that's really what we're seeing playing out over the last few decades, but particularly the last couple of years.
And I mean, even from the start of the year, when you look at the different companies that have had layoffs, I mean, it's not just your Vice, you've got your BuzzFeed, ESPN, News Corp, Disney. It really is a laundry list, including, GANnet as well. So then where do you think these signals are heading in terms of what's next for the state of media? Is it more consolidation, or are we going to see some of these companies just dying out?
I think, we've already seen BuzzFeed News. I'm thinking about their food listicles on BuzzFeed News closing down. You've also seen, I watch especially and pay attention to local and regional media. Like every month we see newspapers close down, whole newsrooms shut down. I do think we're going to see a shrinking of the job force. But also the bright side, I guess you could say, is in a moment of volatility, there's always experimentation. There's always an appetite to see what could be the next big thing. And we are seeing some digital media companies starting in this moment. The Messenger is one. We see smaller ones like Semaphore still trying to make a go of it in this moment, still trying to figure out a way to make good information and good journalism viable from a business perspective. I still think there are investors who are interested in trying to get in on the ground floor. So I still think we're going to see more media companies come into the fray, even if we see these now, they might be considered legacy. It's interesting to think of BuzzFeed as a legacy company shrinking.
And I mean, this is coming at a time you have this convergence of, a tough macroeconomic environment. You have some high profile names at Fox and CNN being laid off within their own sort of issues within their own companies as well. And then now you have AI coming into the fray as well. So when you sort of put all that together, what does that mean for what investors could expect for what the next phase of media will look like when you do have things like AI and some of these big names off the table?
Yeah, I do think AI is that big thing that everyone is paying very close attention to. They're very interested, I could say, in the audio and podcast space. That is a big topic of conversation right now. How can AI sort of perhaps reduce overhead or take on some of the work that people take on? I will still say that is a very uncertain space. You're still going to need human involvement, but I will say that that is a space that a lot of people are paying very close attention to. And again, I think in this moment, if you're an investor or someone who, or a company or a private equity group who is interested in experimenting, in taking a risk, this is a moment where there's a lot of risks to potentially take on because it's a moment of big experimentation. No one has figured this out yet.
Well, it certainly does mean that there are opportunities there for some first movers here. Elahe Izadi, thank you so much. Media reporter for The Washington Post.